I think this is really interesting because Michael Saylor's at an interesting point in his Bitcoin experience, right? He's now going through what anyone who's been in this space for, like I've been in it for 11 years, right? Started buying it at $1. I've been through 3 halvings. I've been through 4, maybe 5, 80% corrections. And so Michael is having his first, big, cream pie in the face of volatility everyone experiences with Bitcoin at some point. Wash sale trading rule, I would give that, I'm fairly ambivalent about that. It's like, yeah, that would be kind of nice, but he's trying to avoid this hyper trading that's going on, people trading without any cost whatsoever into kind of the fastest moving, I'll say shitcoin, I don't know, altcoin. And there's a tremendous amount of social media where you see hyping of a meme coin. And so there's no penalty for that mass of meme coiners out there to just jump into a new one. There's no tax penalty, et cetera. So bringing in a wash sale rule would theoretically put a buffer between that kind of murmurations, as I call it. So I guess it's okay, but you're opening the door to regulation. So that's where I would say put a caution light there. Michael is somewhat of a newbie. It wasn't too long ago when over there at BitMEX you could get 100x leverage. So 20x leverage is moving toward a more sane environment than 100x. But obviously, again, that kind of leverage is not consistent with the kind of the guardrails that should be in place for the average retail investor. And so having access to that, it's almost guaranteed you're going to get wrecked. It really turns platforms like Coinbase and others, that they become more like casinos. I've called them casinos before, unlicensed casinos. And so it has that element to it where you're really, you're putting up a penny and you're gambling on a 20x or a 30x. And as you know, that type of trading is almost guaranteed a loser. So he's right in terms of that kind of existence of as a casino operations going on. He's correct. Again, it opens the door toward regulators, so that would be the downside. He's correct. Again, it opens the door toward regulators, so that would be the downside. Everything that's not Bitcoin, as I've said on your show before, would come under the heading of either relatively or absolutely centralized versus Bitcoin, which is uniquely decentralized. Additionally, a case can be made applying the Howey test that everything that's not Bitcoin would be an unregistered security, right? So, and it also brings about the question about Senator Lummis in her bill that she's trying to get through Congress, talking about applying some regulations to quote unquote crypto. And she does things like she equates Ethereum and Bitcoin. She calls them both commodities, which I think is false. You can make a case that Bitcoin is a commodity like gold, but clearly Ethereum is an unregistered security without any doubt whatsoever. So Gary Gensler over at the SEC had kind of pushed back against all this and said, hey, lady, stay in your lane. You don't know what you're talking about, which I think is the correct response. But when the cross-collateralization issue that he's getting at is really the crisis du jour, I would say, because of what we saw with Terra, Luna, and all these other DeFi coins, that they're manufacturing that yield, Pomp, from kind of cross-collateralizing and putting money to work into other DeFi coins. And these other DeFi coins are generating returns by creating coins out of thin air. So, by definition, that's a Ponzi scheme. So a lot of that DeFi return is just cross-collateralizing into new situations that are creating coins out of thin air and rewarding early, coin rewards, et cetera. Again, unregistered securities. So that's definitely an issue. And here I think that this is definitely a regulatory issue where this definitely would require regulatory enforcement. And you see these things, for example, with Luna, these guys are definitely getting into big trouble. I believe they're completely prevented from leaving South Korea. They're being held by the police. So, this is definitely an issue. So I think with that, he understands that this is what's keeping the lid on Bitcoin at the moment. Is you've got hundreds of billions of dollars. You've got people like Sam Bankman-Fried over at FTX, who's become a kingmaker by creating these enormous kind of cross-collateralized market-making, unregulated situations where price discovery can't take place. This is something that people talked about a couple of years ago. They said, will Bitcoin experience the same problems gold has? Because there's no good price discovery in gold because of all the derivatives. And so Wall Street can really decide what the price of gold should be, not the market. And what Saylor's pointing out is we're seeing this now in Bitcoin. You've got derivatives or DeFi that are creating price discovery for Bitcoin, and it's blocking it from a more natural price discovery from taking place. So I think he's got an excellent point there, and this is definitely under the wheelhouse of the SEC. They're definitely should be enforcing in this case, and they're being lax, and it's unclear why the SEC is being lax. You've got these what he called wildcat banks, these big platforms, and they're interrupting price discovery, and they're doing so in a way that's manipulative and fraudulent. And it's the perfect opportunity for the SEC to step in and enforce the rules. Well, the adoption is definitely tied to understanding Bitcoin. And we know that the more you learn about Bitcoin, the more of a maximalist you become. Nobody who learns about Bitcoin fails to become a maximalist. Only people who really don't take the time to learn about it are left in the camp of a no-coiner or a skeptic. But on this point, I think what he's missing is the global nature of Bitcoin. So in the US, which has the US dollar and it has a much different culture and the financial markets are in a much different place, this is a bigger problem to get through to people who are bombarded